Stock investing can be an excellent way to create wealth over time. Learning to invest wisely and patiently throughout a lifetime will result in returns that far exceed even the most modest income. Stock investing is more straightforward than many people believe. It all begins with understanding what the stock market is, how it operates, your investment objectives, and where you can invest. Before we get started, if you're new here, subscribe to the channel and press the notification bell to be updated when new videos are released. We'll be bringing you exciting finance content, but today, we're focusing on what you need to know about stock market investing. What exactly is the stock market? Stock investing is a great way to build wealth. Even during market uncertainty, stocks are a safe investment for long-term investors. A stock market fall means that many stocks are on sale. Putting money into an online brokerage account for purchasing equity or stock mutual funds is one of the easiest ways for beginners to start investing in the stock market. Why should you invest in the stock market? The ability to increase your capital is one of the key advantages of investing in the stock market. The stock market continues to increase in value over time, although individual stock prices fluctuate regularly. Investors typically benefit from investments in stable businesses that can expand. Similarly, diversifying your investment portfolio would help you create wealth by exploiting growth in various economic sectors, resulting in a profit even if some of your stocks lose value. The stock market's movement is difficult to foresee, but the advantages of investing in stocks remain unchanged despite the unpredictability. What has changed and what needs to change is the public's view of the stock market and its risks. Consider why stocks are a viable investment and why you should invest in the stock market, in addition to putting some of your available cash in a savings account. Advantages of investing in the stock market. Dividend income. Dividends are distributions made to shareholders quarterly by corporations. Some stocks pay out dividends as a source of revenue. Although not all stocks pay dividends, those that do provide investors with annual payments. These payments are made even if the stock lost its value, and they reflect revenue in addition to any gains made when the stock is finally sold. Dividend income will help you save for retirement or pay for further investment as your portfolio grows. Diversification. A stock market investment provides diversification for investors who invest in various forms of investment products. Other types of investments, such as bonds and real estate, do not affect the valuation of stock market investments. Stocks will help you weather losses in other types of investments. Stocks can add risk to a portfolio and the opportunity for significant quick returns, which can help investors avoid risk-averse or excessively cautious investing strategies. Ownership. When you buy stock, you're essentially purchasing a piece of the business you're buying stock. It means that investing in the stock market comes with all of the advantages of being a part owner of a business. Shareholders have a say in who serves on a company's board of directors and how those strategic decisions are made. They also receive annual reports from the organization to learn more about it. Buying stock in the company where you work can be a great way to show your support while still tying your finances to the company's success. We hope you're having fun with the video. We'd like to hear from you. In the comments section, you can share your own stock market investment story. If we haven't covered any key points that would be highly beneficial to you, please leave a comment and we'll do our best to respond. Don't forget to like and subscribe to the channel for more content on money management. How to invest in the stock market in 7 easy tips. Determine the kind of investor you are. You must first determine what kind of investor you are before committing your funds. Some investors prefer to set it and forget it, while others prefer to take an active role in managing their money's growth. Would you like to pick your stocks and mutual funds? Alternatively, you might employ a professional to handle the process for you. You may also contribute to the employer's 401k plan. This is one of the most common ways for new investors to get started. It teaches new investors some of the most tried and accurate investing approaches, such as making small daily investments, concentrating on the long term, and taking a hands-off approach. Select an investment account. In general, an investment account is needed to invest in stocks. This typically entails a brokerage account for the hands-on forms. Opening an account with a robo-advisor is a good choice for those who need a little support. Both processes are described in detail below. A key point to remember is that brokers and robo-advisors allow you to open an account with very little capital. Opening a brokerage account of your own. Buying stocks, funds, and several other assets are likely to be more accessible and less costly with an online brokerage account. You may open an individual retirement account, also known as an IRA, or a taxable brokerage account, with a broker if you're not saving enough for retirement in a 401k or other plans at work. Opening a robo-advisor account as a passive choice. A robo-advisor provides the advantages of stock investing without requiring the owner to do the legwork involved in selecting individual investments. Robo-advisory services cover all aspects of investment management, including during the onboarding period. These firms will inquire about your investment objectives and then build a portfolio to help you achieve those aims. Learn the difference between stocks and mutual funds when it comes to investing. Are you going the do-it-yourself route? Don't be concerned. Investing in stocks does not have to be complicated. For the most part, stock market investing entails choosing between two forms of investments. ETFs, or exchange-traded funds, are mutual funds that invest in stocks. In a single investment, mutual funds allow you to buy small parts of several different stocks. You own small amounts of each of those businesses when you invest in a fund. To build a diversified portfolio, you can combine multiple funds. It's worth noting that stock mutual funds are also known as equity mutual funds, stocks that are owned individually. If you're interested in a particular business, you can buy a single share or a few shares to get your feet wet in the stock market. It is possible to construct a diversified portfolio out of several individual stocks, but it requires a significant investment. Stock mutual funds have the advantage of being inherently diversified, which reduces your risk. Mutual funds, on the other hand, are unlikely to grow as quickly as certain individual stocks. Individual stocks have the advantage of a wise choice paying off handsomely, but the chances of any particular stock making you wealthy are incredibly slim. Make a financial plan for your portfolio savings. In this stage of the process, new investors often have two questions. How much money do I need to start investing in stocks? Also, how much should I put into stocks? The amount of money required to purchase a single stock is determined by the price of the shares. If you're investing in funds, which most financial investors prefer, you can devote a significant portion of your portfolio to stock funds, especially if you have a long-time horizon. Concentrate on the long term. Stock investing is rife with complex strategies and methods, but some of the most active investors have stuck to stock market fundamentals. The most important thing to do when you start investing in stocks or mutual funds is to don't even bother to look at them. It's best to stop the practice of checking how your stocks are doing many times a day, every day, unless you're trying to beat the odds and excel at day trading. Maintain control over your stock portfolio. Although obsessing over daily fluctuations isn't good for your portfolio or your well-being, you'll need to check in on your stocks or other investments from time to time. If you use the measures above to buy mutual funds and individual stocks over time, you can review your portfolio at least once a year to ensure it still meets your investment objectives. Any stuff to think about. If you're nearing retirement, you may want to shift some of your equity assets to more conservative fixed income investments. Consider purchasing stocks or funds in a different sector to diversify the portfolio if it is too heavily weighted in one sector or industry. Finally, regional diversification should be considered. Before we end, I'll give you a nerdy tip. If you're thinking about opening a brokerage account but need some help deciding which one to go with, check out our new roundup of the best stockbrokers. It compares today's top online brokerages on all crucial metrics for investors, including fees, investment availability, minimum opening balances, and investor tools and services. Wrap up. It may take some time to learn how to invest in stocks, but once you do, you'll be well on your way to accumulating money. To reduce risk, read numerous investing websites, try out different brokers and stock trading applications, and diversify your portfolio. You'll be able to call yourself a shareholder before you know it if you keep your risk tolerance and financial targets in mind. Use investing stimulators as a preliminary testing to see how you perform before jumping into the market to handle the market better. Remember that while the stock market can be harsh, it can also be a thrilling and potentially lucrative pursuit. Even if you are starting and have a small amount of money, you can invest. It's more complex than just choosing the suitable investment, a daunting task in and of itself. And you must be mindful of the limitations you face as a new investor. We hope you found this video informative. Please leave a comment below if you have any questions or would like to learn more. Thank you for taking the time to check out our beginner's guide on stock market investment. We'll see you in the following video.